welcome to Insight Private Wealth's Investment Market Wrap. Steve, we've just completed our investment committee review of investment markets and client portfolios. Can you tell people at home a little bit about what's happened in the Australian share market over the last period?
Yeah, sure, Sam. Look, first of all, if you look at the 12 months from last September to the end of September just gone, it's actually a great result. Market is up 13.5%. And you can see that the markets have been going up despite the interest rate rises, been going up throughout the year. It's only in the last bit of this quarter, only about 2 weeks ago, that markets have just come off, and we're going to see this around the world, Sam. And this has really got to do with the central banks, both here in Australia and in the US, saying that interest rates are going to stay higher for longer.
And we've seen something similar happen on the international share markets as well?
That's right. If we just have a quick look at the world index. Now, most of that is driven by the US, Sam. It's about 65% of that index. And as our viewers might be aware, a lot of that's been coming from the high-tech stocks in the US, what they call the Magnificent Seven, based on a lot of AI hype. So overall, over 12 months, the world market's up by 21.5% in Aussie dollar terms. Fantastic result.
Fantastic.
But again, you look at the quarter, it's the same thing.
What about the emerging markets, and in particularly China? Can you give people at home a bit of a feel of what's happened there?
In the emerging markets, most of that index is driven by China. It's about 35% of that index. Now, at the start of this year, China relaxed their tight COVID rules, and everyone thought the Chinese economy would take off. It hasn't done that. In fact, it's defied expectations. Nonetheless, emerging markets have got a 12-month return of 11.5%, not bad, and it's a very small positive return for the quarter.
So client portfolios obviously have an exposure towards things like shares, whether it's Australian and or international, have actually had very positive and great results over this last 12-month period. What about the bond side of things, Steve? They tend to act more as a defensive part of client portfolios. How has the bond market performed over the last 12 months?
Yeah, typically, of course, bonds are there to protect the portfolio when equities fall out of bed. Now, equities haven't been falling out of bed. They've been doing the opposite, as we've seen. They've been going along really well. And the bond market reacts to that. And you can see that the yield that we're showing there, that's the US government yield. They're the biggest part of the global bond market, keeps going up. And consequently, the price of the bond is going down. You can see in the bottom columns, they're the quarterly returns of a bond index hedged to Aussie dollars. So Sam, we've sort of reached what they call the terminal rate. In other words, interest rate rises are pretty much done. But the bond market is saying with those rising yields, there's probably one or two left. And again, that comes back to the narrative of higher for longer. So there's sort of not great news in the quarter because you can see that the bond returns are a little bit negative there. But the positive on this is over the year that the bond returns are positive. And that's because bonds are now yielding 4 to 5%. So that's offsetting any of the price that's gone down. And so if you're in bonds now, you have worn a little bit of pain over 2022, but it's actually in a really good position now where bonds are earning 4 or 5%, and they're at a level where they really can protect the portfolio should equities seriously plummet out of bed.
So they're really doing their part in terms of that overall diversification of client portfolios.
They really are. They really are.
Yeah, fantastic. Thanks very much, Steve. And thanks to everyone at home for tuning in. Just keep in mind, Insight Private Wealth is independent. We're not here to sell you any sort of investment products, etc. and so forth. We truly believe in diversifying client portfolios and making sure that they're invested in your best interest. So please feel free to distribute this or send this to friends and relatives if they're interested. And we look forward to seeing you next time.